At the recent RiskMinds Insurance Summit held in Geneva, Glenn Lottering, Senior Director EMEA at Oracle Insurance, outlines how technology is fundamental when facing regulation.
The regulator is asking very particular reporting requirements to be delivered, and you can't do that without technology. So in order to deliver against Pillar 1, 2 and 3, in each one of those cases, technology forms a basis of it. Now, of course, there is other things that needs to be taken into consideration. There's people issues, there's cultural issues, there's a vast majority of components that make up the delivery of Solvency II. But at the base foundation lies technology that enables the delivery of the final result in terms of solvency. Very large multinationals, you'll see that the readiness is actually quite mature. A lot of them are ready for whatever it is that the regulator needs them to deliver on. But therein lies the complexity for them, because we haven't got finality on what that delivery is yet. There's possible delays already again in terms of the regulation, which is creating a lot of unhappiness. It's putting the industry in a lot of stress in terms of how they're going to meet any deadlines that are proposed. The only thing that we have had in the past was Quiz 5, which most of them came through the gate fairly well. But now with the QRTs and the use test and the ARSA on the horizon, with a possible delay for that, we're not quite sure how this regulation is going to pan out. If we consider the mid-market and the lower end of the market, this regulation is hugely onerous in terms of cost. So I think it's important for customers to actually realize that there is better ways to do things than what they are currently doing. There are more options in terms of technology. In order to meet the stringent requirements for technology by the regulator, we are going to have to change things the way that they are currently being done. You know, in that lower end of the market, there's a lot of uneasiness, but the large players in the main are all ready for solvency as it is. You know, we come from an environment where we have provided this technology into the banking world already. We are a dominant provider of technology in terms of all three pillars when it comes to banking. And it would have been prudent and really quite clever to take that base technology and move it into the insurance world. Now, of course, there needs to be a lot of adaptation in terms of the requirements for insurance, but the base technology needed to deliver to very specific requirements. The regulations are very similar in some respects, and so we took our banking platform that we have successfully delivered across the globe, and we have now ported that into a solution for insurance. We've made all the necessary changes in terms of data model. We've made the necessary changes in terms of our calculation and risk engines. We've made the necessary changes in terms of the reporting. So what the insurance industry is getting from us is a well-proven technology framework to deliver Solvency II on.